Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Hey, I see Greg here. Geez, I haven't seen Greg in a while. Hey, nice to see you, buddy. Great to see you back. Just looking down on the, hey, there's the YouTube is live and functioning, so that's good to see. Looks like we're going to hit the ground running here today. I see a whole bunch of faces I haven't seen in a while. I suppose the crypto market is perking up here a little bit, so wouldn't be surprised if we see sort of people start to get a little bit more interested in the market. So that's always a positive. It is Friday, TGIF and all that. Mr. Bear actually won't be here today, which is all right. I mean, he pops in and does his presentation. And we're awfully lucky when he does, and he'll be back, I think, probably Monday to update us on how he's rocking this market. We've got, of course, the mayor of Vienna driving the bus. How's it going this morning, Mr. Mayor?
Hello, hello. All is fine. How are you, Brian?
Good. I'm just teasing. When I got to tell you, when I did my European trip, Alex was just the most beautiful, and his girlfriend Joanna were the most beautiful hosts. They really treated me really well, and that was one of our running jokes was the mayor of Vienna, crazy guy. So if you do hear me make reference to that, that's the running joke. But anyway, here nor there. We got lots of fun stuff to talk about today. Of course, the stock market's doing its thing. Crypto is doing its thing. So lots of back and forth. We had a pretty big scandal developing. Scandal. I don't know whether you call it scandal, but minor crisis, if you will, in one of the crypto platforms. And actually a gentleman who uses these platforms extensively, Grim, our instructor for the level 1 course, is actually on the call today. And I've asked him if he could actually help us sort of see the forest through the trees. And, you know, of course, some really good sort of rules of thumb when it comes to trading on these various exchanges. So we're actually really fortunate we have him here today to talk a little bit about that. And as well, I think it was Wednesday, but I'm not quite sure. It was one of these days of the week. We were going to give you everybody a presentation on master nodes, sort of a follow-up. Philip, one of our OGs out of the UK. I had a great time meeting him when I was on my European tour. He's here today, and he's got a really cool slideshow presentation, sort of a follow-up running sort of dialogue on master nodes. So we got quite an action-packed episode here today. Philip, you want to say hi to the good people?
Hello.
Hello, there we go. You just got a British good morning. Actually, I suppose it's the afternoon, isn't it, for you? So
yeah, it's just gone 5 here. Yeah, I'm up north actually for the weekend, so I'm in a hotel room. I shall.
Okay. Well, we won't hold that.
Come back when I'm invited.
Oh, okay. So where the heck do we begin? Once upon a time, maybe we'll just spend a few minutes just doing a quick overview of the stock market. Then we'll pop on over to crypto and talk a little bit about Bitcoin. And then maybe at that point, Grim, you want to say hi to the good people? Are you there?
Hey, everybody.
There he is. So we'll pop on over. Sorry?
I was just saying to everybody, I hope they're all doing well.
Oh, well, that's awfully sweet of you. Well, that must be the Canadian side of you coming out of you. Your wife is rubbing off on you. I'm just kidding. But Griminator is our instructor for the level 1 program. Love him to death. Just the greatest guy, the Wookiee. So, okay, so let's get to work. We got a lot of stuff to cover here, and Brian's blabbing again. I gotta tell you, it's awfully tough for me to control my blabbing. So let's get to work. Broader market, a couple things that sort of jumped out at me today. Swing traders, they were rocking it on the euro. And I even sort of pointed out yesterday that, or actually first thing this morning, that, those people that are actually following sort of 2-to-1 metric, I noticed that, gee whiz, what a coincidence. You can see how she came right down to that 2-to-1 level. Keep in mind, a lot of professional traders just simply use those levels. And look at that. I mean, basically right at 2-to-1, and then it's starting to reverse here a little bit. I posted in the lounge, really, I wouldn't have a problem you can see the size of this gap. We basically come into the gap. If you were just like Brian, I like 2-to-1s, want to take that profit, fine. You can see that the 50% level is here, and I wouldn't be surprised through the weekend and early Monday morning. Yeah, Willie is stupid, but I don't see any signs of divergence here. So long and short of it here, this swing is just working away. And it was interesting yesterday and the day before, we were watching the crude oil market very closely. And, I think Zach has been really rocking the swing trading room and working really, really hard. Zach, this is such a good lesson for us about railroad track bottoms. I had tentatively said that keep in mind that this is a higher high than this high, so we can't really call that an M. And of course, Mr. Bear, he would be watching these clotheslines. So you can really see the M was very well developed through here. So I had actually put the swing trade metric on here and just simply said, if we lose the railroad track lows, then that'll generate that signal. And you can see that that clearly didn't. And so I was looking at this and I was wondering, okay, I wonder what the heck is going on. There must be something bigger going on to cause such a violent rally. And of course, in the stock market, we're all raw uranium names, and they are going absolutely nuts. And of course, this is another energy proxy. So there must be something bigger going on here. And when I zoomed out and actually looked at the daily crude chart, it slipped my mind. And you can see, of course, we've got, bots all over the place going crazy here. But we actually even just recently, we're talking a little bit about this little bitty bot that formed here. And I think this is what's dominating trade in the crude market right now. Boom, 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 boom. And so we should be really cognizant, watch this peak here. If we blow off through the top there, then probably what that's suggesting is we're probably going to take a shot up to this 82 area. You can sort of see how that's playing out. I can't imagine the smaller sort of time frame swing traders snuck in off of sort of a check of that original bottom, and they're coming into their profit objectives right up against these highs. So, the swing traders were watching this top. That railroad tracks low is basically that fractal, sloppy empire. If the empire had fired, boom, down we would have gone. They didn't fire that fractal, and really this just looks nothing more than a continuation of this AB equals CD taking us up top here. So, that's sort of what I'm seeing in energy, and it sort of validates what I'm seeing in the uranium space and almost any sort of energy proxy spaces. They're still looking for higher crude prices. Now, when I was doing some study earlier, this is a bit problematic because there's one part of the economy that doesn't do very well if energy prices are going through the roof. So Alex has said here, baffling oil surge makes obscure benchmark the world's costliest. Just a side note. All right, thank you, Alex. Alex has just posted here for my review, and all of us. Baffling oil surge makes obscure benchmark the world's costliest. So the question that I would have here is, I actually tweeted out that the Iranian oil ministers are like, what the heck is going on here? The fundamentals don't justify this price. And so the question here, and sort of what I put out in my tweets about all this is, would it be in anyone's political best interest to have a high oil price here? The answer should be extremely obvious. There's one part of the United States economy that has basically come out of nowhere, where there was no economic activity, and then all of a sudden, boom, they've got massive revenues. But the problem, of course, and I'm speaking specifically about North Dakota, is that they need a relatively high oil price to make that whole project justifiable. It's very similar to sort of the Canadian oil sands kind of idea. So it's interesting listening to, the OPEC people say, hey, don't blame us. Somebody else is driving this bus, and I think we all know who that is. So, once we get on the other side of the election, I would be very, very cautious about energy. But right now, we still got about a month or so into that election event. And interestingly enough, if we actually zoom out and take a look at this from a really big picture, does everybody see how this is actually quite cliche? that you can actually see the original top. And this is actually when I left. This is what I used to be, a crude prop trader all through this. And I actually left the business right ahead and I joined crypto right here. And the whole friggin' market just collapsed. Oh, good timing getting the hell out of the oil business, eh? But the irony of all of this is that if we look at these levels, and I remember when oil was down here, I used to say, the market will probably work its way back to $80, $90 a barrel. And I remember at the time, everybody's like, no way, man, that's it. Oil's got, right? And yet here we are. And you never know how this is going to play out. You never know why it's going to play out. And that's sort of the funny story about us technicians, right? Is we have sort of a crystal ball. We can sort of see that, yeah, you know what, energy prices really should work their way back up to this reload zone. 61.8, there's this guy sitting in the oil pits just waiting to hit that level right there. And that would be against the original market structure fail level. But we never know why, right, as technicians. So really good anecdote that really seeing an uppy crude price here shouldn't surprise us. And really, I think this is a lot of it's pure politics, nothing more, nothing less. Okay, so the point that I was going to make about that is that if we go and look, you remember the other day, we talked a little bit about internals in the market, and there's a problem here. A couple things just aren't really jibing well with me. First off, if we actually look at the broader stock market, there's more stocks making new 52-week lows than there are stocks making 52-week highs. There's a major disconnect going on here. Now, obviously, this is, how do we say this? This is corollary data, but nobody trades the new highs and new lows. It's an internal sort of health measure. And it's simply saying that, hey, internally something's not right about this market. And then we look at the advanced decline line, same sort of thing. The number of stocks advancing versus the number of stocks declining, this is sort of trending down. Problematic. And then what I really wanted to get to you with you guys, and Mr. Bear had been talking a little bit about it recently, was he was very interested in things like American Airlines. And the long and short of it here is American Airlines, I mean, yes, it does have a double bottom, but does that really look like a major bull market to you? To me, this looks nothing more than like dead cat bounce off of a problematic market, right? 38.2. Oh, gee whiz, we stalled right here. First stop target, blah, 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 blah. And over the short term, you can see American Airlines is not going up. It's actually going down, right? 1, 2, 3, 4, 5, plus like sort of weak. Something's disconnected here. So that leads me, and keep in mind, American Airlines part of the Dow Transports. So that leads me to this problem, and that is this thing called Dow theory. And, all you level oneers, you should be very cognizant of this. This is part of your strategic planning part of the course. Do you remember this, Axel? I always like to bug Axel. Axel's my guinea pig. I don't know whether he remembers it or not, but anyway, long and short of it here is, if we have a situation where the Dow Transports fails and it starts breaking down, then if you have the industrials actually push to new highs, this is actually what's called a Dow theory sell signal. And it's a trap. And you can see the Dow eventually had to come down and sort of get back in lockstep with the transports. So we have a bit of a problem here. You can see the triple top in the transports. We just looked at American Airlines. And yet we have the Dow pushing to new highs here. Something is disconnecting here. So just be cognizant of this, guys. It's not here yet. And I don't think this is recession talk. I think this is more just sort of seasonality. And I'm really worried that the stock market and commodity markets are being heavily influenced as we're heading into this very big political event that's going on down in the United States of America here in early November. Something's fishy here. And what I'm worried about is we get to the other side of the election. All of the politicians have been elected. Everything sort of goes back to normal. and the market goes, okay, now we can go back to sort of normal valuations. And we've seen this happen quite a bit, actually, over the past few years, where sort of January, February, March, which typically isn't the normal time of year for stock markets to correct. Usually it's September, October. But we see January, February, March act as a really funny time period for stock market corrections, right? Even just last year, this happened, and the market topped in January, and then January, February, March was just an absolute train wreck. So please understand that definitely is, you can sort of see the pot stirring here, and it's a little bit concerning. Having said that, there is no break today. And actually, I even put out this chart, and I haven't talked about it in a bit, but we probably should just touch base. This is sort of our interest rate review. I put out a tweet today just simply saying that it looks like, the Fed was actually getting behind the curve here, and was kind of losing control of the situation, and the TED spread was starting to get up into dangerous levels. And Brian was going, oh shit, TED spread, financial crisis, But you can see that the Fed just basically has been slowly raising interest rates consistently, but the market has sort of calmed down a little bit here. And so as a result, the TED spread has come back in. So we don't have to worry too much about financial asset crisis over the short term. At the same time, too, the yield curve, you can see we go short rates, teal, medium rates, green, and orange, and then long rates red. The yield curve is still healthy, it's still normal. So we don't have to worry about recession from the economy just simply tipping over. So no crisis, no yield curve inversion. Technically, it's just business as usual. And really, this has been, this is probably one of the most important charts that I like to follow over the long term. And that's just simply this question of whether inflation or deflation is sort of dominating our society. And you can see the W's that are trying to be put in here. So, this is sort of, financial asset crisis as the market's sort of melting down. I don't know how far back this chart goes. Yeah, so we can see there is the financial asset crisis, massive deflation. The Fed goes and just throws helicopter money at the market, right? Quantitative easing, get inflation back into the system. That sort of short-term shock. Then the Fed says, okay, well, we're going to try and sort of take a little bit of that back. And then the market says, but you're still in deflation. And so, Janet Yellen, her entire tenure was just simply look at, just let the system, settle down. We'll just keep rates really, really, really low as long as possible. We're not going to take back the quantitative easing. And you can see the market is slowly believing that the Fed has sort of gotten in front of this inflation deflation problem. It sucks for all of you and I, because what it just simply means is they're desperate to keep this inflation game going, and they're just going to dilute the shit out of the currency, which means our standard of living is all collectively going to collapse for them to make sure that the system keeps going. And you could argue that this chart is exactly why something like Bitcoin even came into existence, because people don't like this financial engineering. And, savers, somebody who saved $100, $200, $300,000, literally they're watching their purchasing power of that savings that they spent a huge part of their life just vanishing, right? And that's one major reason why all you guys are super interested in crypto. And one could argue one of the main reasons why Bitcoin has done as well as it has is because of this problem in the system. Anyway, so some interesting talk. Just wanted to quickly take a boo at interest rates and give you sort of an overview of that. Okay, anything else that we really need to discuss stock market wise? So we've talked a little bit about energy market. And so that sort of explains a little bit of why we see uranium doing as it's doing. Alex and Bart, I think it is, are going to give us a really cool presentation on some uranium ideas going forward. I think the fundamentals for uranium are looking relatively strong. It's interesting to see that the NASDAQ, I bought a little bit of insurance on the NASDAQ, and the NASDAQ is having a really, really hard time here at the reload zone. Can everybody see this? I mean, how cliche is this? People that are relatively new to the site, they probably don't realize that the market actually stalling exactly where it is stalled is actually extremely normal. I mean, this is just so cliche, it's ridiculous. So let's keep an eye and keep in mind too that this is quarter end, right? This is the last business day of the third quarter. So we're going to be heading into the first week of the fourth quarter. And of course, we have to do the first 2 weeks study and all that. And the irony of it all is that basically all they've done is they've just brought the NASDAQ up into an area where if they wanted to short this stuff into the first week, you know, if the fund managers and stuff wanted to, you know, underweight technology or whatever. And this is it to me, this smells a bit suspicious because the same sort of thing, you know, we saw this yesterday with Apple. Notice that, you know, why did Apple and why did the NASDAQ jump up there? Look at that crazy ass move, just bang, right up into this trendline resistance area. This is, if anything, where institutions want to get short. And gee whiz, Mr. Diamond, Bitcoin's a fraud. Yeah, right. That guy's, his whole life, in my opinion, is a fraud. I have a funny feeling that they engineered this rally so that they could get short up here. So, and at the very least, maybe just square positions. So I'm not totally convinced that the NASDAQ and technology is actually quote unquote breaking out here. And then of course, if we go back to our conversation about Dow theory, let's all just be very, very careful here about getting too excited about the stock market rip-roaring to new highs. And if anything, on one of my screens here, yeah, here's the Dow itself. Yeah, there you go, Joshua. Thank you, sir. You know, here's interestingly enough, here is, you know, the DIA. And it's fascinating that, you know, into these harmonic levels and into this, you know, fill the gap in, we waited forever for that to happen. The Dow's actually floundering a little bit here, right? It is interesting how they left a little bit of a gap here so they can prop it up into the sort of the first week or two of the new quarter. But can you guys see how, you know, the election is right here? So, you know, the window for them to prop the market up, it's starting to close. Once we're beyond this date, you know, strap on your seatbelts. There could be an extremely wild ride after this. So, well, I'm still thinking, whoops, hello. Somebody want to say something?
Yeah, so the other thing to note, I think, is looking at the dollar, right? Look at the DXY. We had this, what looked like a really kind of beautiful head and shoulders come in, but then if you look at the MACD is...
Yeah, something looks really problematic here.
That looks fishy as heck. Yeah. And so, now, you know, all of these things, the equities market, the crypto, all that, right, is paired, generally speaking, with the US dollar. So big moves here are going to affect the ships in port, as it were. You know, move everything up and move everything down.
I was looking at the euro this morning. There's so much to look at. I'm sorry, guys, if I'm going a bit slowly here. But I was looking at the euro this morning, and holy Jesus, this is actually a Davos signal. Can everybody see the, and this kind of a crappy color here, so it might be tough for you to see that. Let's see, let me change that to a nice bright color for you. Hey, there you go. Maybe that's a little better. I don't know. Having teal on teal doesn't make sense. But anyway, long and short of it here on the euro, can everybody see this very noticeable breakdown here? Mm-hmm. Coupled with a M in OBV, coupled with an M in our price oscillator, in this case, Willie. So put it all together, there is major problems developing out of this euro unit. And it's sad for that Julia de Klerk lady because she's been like super, super bullish of the euro and it just won't cooperate with her, right? And I think the scuttlebutt du jour, the sort of reason du jour for problems is Italy now is in some hot water. So let's see how this plays out. But it's interesting because I would make the argument that this is a risk on proxy. So if this means that it's breaking and risk is off, then that's problematic for things like stock markets, for things like crypto and stuff. And here is Grimm's chart, US dollar. You can clearly see Grimm's double bottom in the MACD and Willie Stupid here. I was thinking, and I sort of talked to you guys, I think it was back at the beginning of the week, about this AB equals CD needing to be validated in 38.2. But hey, the market's going to do any old damn thing it wants. And if the market is like, nope, I'm done going down, I'm heading up, I'm going to be looking, and I suppose we could probably do fibs going the other direction. We're at 38.2 right now, so you could make the argument that we're just sort of deciding what the direction of the trend is. But I do remember talking to you guys and sort of suggesting that, and I'm thinking that this US dollar is near some sort of pivot here. So, you know, let's see how it goes. Don't really necessarily have any new position trades for these big basket of currencies. They're not really in the best sort of trade setup for a position trade for me here. But as I had said earlier, I am very interested. I thought we had a really great swing short there on the euro. And what's really interesting about that euro short, you can see it was like a triple top, head and shoulders. Remember we talked about the gravestone doji, all that kind of stuff. What was interesting about that is if you look at the euro on the daily chart, what it really was, if you zoom in, is you can see that this was, like we like to call this, a diamond day. So we say, twinkle, twinkle, little star. Up there. And I won't spend a lot of time because that's just going to take too long. But you can see the diamond pattern right up in there. And again, holy Jesus, we're getting a lot of sort of back tailwind inertia here. There was a bit of a gap that was left on the intraday charts, you know, those hourly charts. I still think that needs to be filled in. So I am going to be looking for a bit more weakness into sort of Monday, Tuesdays kind of action. We should see some support here, and there's the 50% rule. So long and short of it here, had a swing trade set up. I don't necessarily know whether I have any position trades. Excellent point Grim makes. US dollar's looking a little stronger. And if anything, you know, if you are a risk taker, that's the last thing you want to hear is that the US dollar is really strong, because that's actually a risk off bet. So be careful, everybody. Okay, we talked a little bit about stock market. Interesting how the bonds have actually put in a double bottom here. They're fighting right at the 13 EMA. I might go and add to that position. I did a, you know, total nutso trade, but hey, everybody makes mistakes. I bought a call up here for the spring. I might go and buy another one. I think I talked to you guys a little bit about that, but I would like to see a little more structure here. So we'll see how that goes. The only trade that I think that I'm getting really angry at, pissed off at myself about, is this silly Canadian banks. I've been wanting to be short these banks. You can see the double top here, but the options prices just did not set up well for me, which pissed me off. Typical Canadian, totally controlled market. And now you can see the goddamn Canadian banks are in free fall here. And remember, guys, they always say that the Canadian banks lead the market. So if the Canadian banks are breaking down in earnest like this, that's not good for the broader stock market. So just be aware of that. If you weren't aware of that, make a note of it, right? And put that in your journals. You know, well, I'm going to listen to Brian about these Canadian banks. And if you want to create a screen of Canadian banks, but we used to say for years and years and years and years, Canadian banks always lead the market. So the fact that the Canadian banks are in free fall now here, that's not a good sign. And of course, you know, the Canadian real estate market, I've been squawking about how incredibly risky this market is forever. And you can see here's our Canadian real estate ETF proxy. This is the Vanguard FTSE Canadian Capped REIT Index. And I even tweeted out, I went, uh-oh, this looks very problematic. So, and you can see where the gaps are, reload zone. The only problem is that this is less than a 10% move. I can't make fucking money on that. So again, I think the Canadians, they froze me out of a trade here. I don't see a trade that I can do here, but nonetheless, there it is. Okay, Brian sure has talked a hell of a lot about stock market today. I'm sorry, guys. I could go on and on and on. We haven't even really looked at the juniors. You know, one thing I will mention before we leave the stock market is Sjord's working away on building out his algo screener. And I showed everybody Sjord's screener from the other day. What do you think? Is that the kind of signal that you guys want? Look at that motherfucker go. God damn it. I mean, this is it. And I was joking with you. And yesterday I was like, okay, is it any signals? Any signals? And he's like, no, nothing generated today. And even today, okay, any signals? Any signals? No, nothing generated today. But look at that. Oh, holy Jesus H. Christ. So this is the kind of shit that Sjord's bringing you guys in the not too distant future. Everybody talk sweetly to Sjord. And let's get this train rocking and rolling here, because, man, his algos, when he gets the screeners up and running and rocking, oh, my God, it's incredible. Okay, enough stock market. Let's move on over to crypto. Okay. Just before I release the Wookiee, and I think we had some seriously important shit happen overnight here in crypto space. If we just take a quick boo at Bitcoin itself, I put out this tweet yesterday, and I spent the whole summer, and I wanted to do this for the site, sort of demonstrating my RSI model and my approach to using the RSI model, and this whole idea that the first M or W is sort of breaks the back of the previous momentum move. And then the second M or W actually sets up the trade. And here's a really good example where you can see the market was just screaming down here. We put in a W, which sort of stops the bear slide. You can even see the divergence that was developed through here. And then the second W actually fires, and this also too was a W through the 50 line of the RSI. And of course, everybody who did the level 1 knows how important the 50 line is on your price oscillators. This was actually your buy signal. And that was the ensuing rally. I think we have sort of similar situation that developed here. You can see the market came screaming down. I don't know whether we can really call that a W, but I definitely like this W here, and it broke this downtrend line, which translated into this move. And I would make the argument again, here is sort of that 50 line, and we've got a major downtrend line working with. We need the market to give us this second W and a nice convincing move through that RSI midpoint to generate our next big fat buy signal. I would argue right now that we're doing nothing more than just oscillating around the 50 level and just asking ourselves, do we want to be a bull or do we want to be a bear? So I appreciate that everybody wants to be a bull. Everybody wants this thing to go face ripping higher, but we have to wait for it, wait for it, wait for it, wait for it. And I think the market was actually feeling very optimistic. And then, of course, CNBC comes out and says, oh, I got a bullish price objective. Everybody go long. And everybody on Twitter collectively went, oh, fucking hell. Literally, these sons of bitches did it again. I swear, somebody, we should just put like a Twitter lobby. Can we please shut down their Twitter feed? Because literally the moment that they came out with that, the market just stopped. I do understand that there's like 3 different futures exchanges or forwards, whatever you want to call them, that are having contracts expiries. I think the CME contract expires today. I think MEX contracts expires. And I think OKCoin's official 3-month contract rolls over, and the original 3-month contract is going off the board from the last series. So I do understand there's a lot of position squaring going on here. And I just can't issue like, all right, rip roaring, we're going higher, until this kind of picture resolves itself fully for the bulls. So with that said, we had a pretty big event happen in the crypto space last night. A lot of people who wanted to come to crypto a few years ago didn't want to play, the stock market game, found a few different websites that offered stock market proxies that you could do through crypto, and one of them got into pretty hot water overnight. And as well, Alex is suggesting that we have this SEC, which I think has now become a non-event, and they're going to just punt again, but that's just my opinion. We have that news event coming in the next 48 hours. Maybe that's what launches this thing higher through the weekend. I don't know. So keep your eyes open for that. Thank you, Alex. And if you have any sort of links or anything to that effect about that news release, please feel free to post so I can add that to my tool belt. But I actually asked because Grim has used these sort of crypto stock market proxy platforms in the past. And I know he's very familiar with it. He has some very specific rules about using these platforms. So when I loaded up the video today, I thought, who better to tell us and maybe just give us a little dose of PMA? And, if you're in the situation, what are some ideas that you can think about doing? Who better to talk about this than the Wookiee himself? And so I asked him to come on earlier and just say, do you mind just chatting with our community a little bit about what you see going on with this whole situation? So without further ado, Mr. Wookiee, you got the floor. I don't know what we should talk about here first. I did tweet out sort of the news headlines. So you can always find the sort of news links about One Broker through the Twitter feed. If somebody wants to post more links to that news article, news events in the lounge, feel free. But Mr. Griminator, what do you think? How should we start this conversation off today?
Well, I think we need to talk about the idea of systemic risk. So something we talk about in the level 1 course when we talk about risk management is there is a concept of systemic risk, which means risk that is part of the platform that you're operating on, be that the exchange or what have you, right? And one of the chief things that comes along with being in a decentralized environment like the crypto space is that it's unregulated. And sometimes we love that, and sometimes we recognize that entails a lot more systemic risk, right? When we look at sites like BitMEX or SimpleFX, both of those are housed legally in, I want to say that SimpleFX is in the Cayman Islands, and BitMEX is in Seychelles, right? Well outside of any kind of legal jurisdiction. If I had a problem with my coins just disappearing in off of SimpleFX or off of One Broker or off of BitMEX, I really don't have any legal recourse that I can go through, right? And that's something that right? That's something that really needs to be addressed, right? And so as part of that, what I have in my plan is, and what I generally would recommend to people is they have some sort of method of lessening that risk or lessening their exposure. And what I do within my plan is, first of all, for every exchange that I operate with, I have a separate Bitcoin wallet on my ledger. Okay, I have a Ledger S for my hardware wallet. So I have a wallet that's dedicated to when I'm trading on SimpleFX. And within that, I hold the funds that I have dedicated to use on that exchange. And of that, I only ever have no more than 4 maximum size positions. So that would be no more than 20% of that stake on the exchange at any given time. If I have a win, at the end of each day, I go in and I just move the excess funds off of that onto my hardware wallet. And there are some areas where we can't do that. I'm thinking here particularly of altcoins. In order to have your altcoins ready to sell and have your sell orders in, you have to have your coins on an exchange, which is why I'm such a big advocate of a decentralized exchange and why I'm spending several hours a day trying to determine the best course to go with a DEX for myself and our funds there. But you can control some of that risk to an extent. For instance, I only trade altcoins because of systemic risk. I only trade altcoins on Bittrex, which is housed in the United States, and Poloniex, which I'm not sure where their offices are exactly, but they are ultimately owned by a U.S. corporate entity. And so, yeah, evil one. But nonetheless, that's why I primarily trade on those two platforms, is because while they are unregulated, there is at least a legal recourse for me. I still don't like it, and I would still prefer to have my coins controlled by me, but you need to be aware of the risk that you have when you have your coins on these exchanges. I mean, I've had no less than 7 or 8 people since I went to bed last night and got up this morning reach out to me privately and say, well, do you think my coins are safe on SimpleFX? And that's a resounding no. Absolutely not. It's completely unregulated. And so you need to go in with your eyes wide open. That is a very high risk place to have your assets. So,
thank you for being completely honest, sir. I really appreciate that. It sucks. And the problem in this space, kind of like Bitcoin, 15, 20,000, right, is you want to tell people what they want to hear. Oh, yeah, everything's fine. Everything's fine. But if anything, the value out of this site TRI is we don't blow smoke up your ass. So thank you very much for being completely honest and candid there, Grim. That is incredibly powerful value for all of you. It may not be what you want to hear, but it's the truth. So thank you, sir.
You're very welcome.
Continue, please.
Okay, so I noticed that Shane, you posted that you mitigate your risk somewhat by using multiple exchanges. That way you have your exposure spread across exchanges. That's another very excellent idea. So that's pretty much how I manage that. Now, I do still actively trade on SimpleFX. It's worth noting that as a U.S. citizen, I can't have an account directly on SimpleFX, but my wife can as a Canadian, and we still have a residence in Canada that we can use for that. So so it's worth noting that's the case there. I won't get into any legal advice, but please attend to your legal situation. Okay, don't break any laws.
And don't take this shit lightly, please, people. Don't take this shit lightly, because what ends up happening is, the regulators and stuff, they'll go, okay, fine, just let it go. And then 3 or 4 or 5 years down the road, they'll come back at you and they'll go, yeah, but we see that you did that then. And then they just shit on your head, right?
And bear in mind, once they have established a Bitcoin address, they can follow the coins from address to address in perpetuity. That's an indelible record. So once they've associated an account with you, they can see everything that's happened with that account. So that's on the public ledger. So just be legal, make sure that that you're operating above board. It is well worth the pain in the ass to avoid future pain in the ass.
Okay, thank you very much. I totally appreciate the sound words of wisdom, sir. And we as a community will be working through this. I mean, obviously, this is an ongoing issue here. From what I understand, everything's just been sort of locked down. I don't think the SEC is going to try and screw the customers. I think probably what they'd like to do is just simply ask these people to close up shop. So if anything, if you do have coin here and you're sort of sitting there in limbo, I did see some people were able to use like their cell phones and get the coins off. But from what I understand, the site is basically locked down. You're just going to have to sit and be patient. As I said, I don't think the SEC is here to screw over customers. And my hunch is, maybe they force them into liquidation and everybody gets their money back. I think that's sort of the ultimate goal here. But you're just going to, if you are caught here, you're just going to have to play it cool, keep a level head. And, of course, really good lesson, as Grim says, don't trust any one particular exchange too much. It's just not worth it. So thank you, sir. And if anything, maybe in future episodes of the Daily Brief, we'll touch base and update the community as to what's going on here. Because we actually have a special presentation for you guys here today, I think I will curtail going into sort of alts, and of course on the weekend Broiler Chicken Show we'll do lots of sort of looking at particular alts. If anything, why don't you guys stuff up the sort of request room And then for that Broiler Chicken show, I'll just concentrate specifically on requests, and somebody just remind me. And then that way, we'll take a look at a lot of altcoins through the weekend. I would like to, we're getting close to the top of the hour, and I think Phil's presentation is about 10, 15, 20 minutes or so. So I think this is probably a good way for us to sort of wind up the week. Phil, do you have a microphone? Are you there, sir?
Yes, I am. Yes, I am.
All right. Excellent.
Screen share time, yeah.
Yeah, and Phil's actually got a really nice presentation. Are we still seeing just there you go, TRI Masternodes presentation. And Alex, maybe if you could have Phil share or show everybody.
Yeah, we're doing that.
Awesome. And you know what? I don't even need to say it. I know that Alex is going to rock this thing. So thank you, sir. So without further ado, we do have a special presentation for you guys today. Phil came and gave us a nice presentation on Masternodes, I think a couple months ago. Kevin is side by side with him in the lounge. It's kind of interesting that the system put them side by side. Kevin might contribute something to the presentation. I don't know. That's entirely up to Kevin. But the long and short of it here is we did ask Phil to come and give us sort of an update on how things are going with Masternodes. So, Mr. Phil, you do have the floor. School us a little bit on masternoding, please.
Excellent. Okay, well, what I had in mind for today was really a follow-up to the first one I did. So for anyone that didn't catch that, it is in the library. If I just quickly come out of that presentation, anything that doesn't make sense from what I present today, Kevin and I did obviously do round one of this in here. So there's a link for it there. Might want to go back and rewatch that and then rewatch this. I don't know.
Okay, so should we make a note to put today's presentation material in there as well?
Entirely, it's your site, Brian. Entirely your call. I don't.
Well, you're Mr. Masternode. I take orders from you.
I'm sorry.
But yeah, okay, we'll make a note to put today's deck in there as well. So thank you, sir.
Okay. So I had some fairly decent feedback on the last one. I think I delivered a decent amount of value. And really encouragingly, quite a few people actually went on and took the next step, and all credit to them, got up and running with their own masternodes. But I'm sort of equally conscious that it's a bit of a daunting thing. You've got to set up a VPS to run one typically, and we all live sort of pretty busy lives. There's a hell of a lot to take in crypto. So equally, there's probably a much bigger chunk of people that watch that first presentation. I'm going to put you in this category as well, Brian, as someone that's got new website to launch, school to run. You're not going to have done a website. Done a masternode. Am I right?
I haven't had the time. I apologize, but
no apology. But that was really.
That doesn't mean that this information isn't super valuable.
No. That's why I thought I'd come back and try and attack it from a different angle. Basically share some stuff that I'd sort of worked out for myself that might make it a little bit easier to get into masternodes without getting into masternodes, if that makes any sense at all. So
sure, it's all good, dude. All good.
So I actually discovered this a little bit by accident. When I came at masternodes, I was all gung-ho. I went onto the comparison sites like Masternodes Online, and you can compare all the sort of ROIs and everything on there. I think the vast majority of people probably attack it in that way. They say, oh, masternode coins, I'll go and set up some masternode coins, and away I go. An aspect that often gets overlooked is that a portion of the block reward for a lot, but not all of these masternode coins, is reserved for staking. Typically, it seems to be a sort of 80-20 split or thereabouts, maybe 75-25, but almost always skewed towards masternodes. So again, a reason why it's sort of a path less traveled, an overlooked portion of the block reward, the percentage isn't there up front. So when I discovered this sort of by accident, when I discovered it purely by leaving a wallet unlocked for staking, and some of my coins started generating staking and then I realized, this might be an alternative thing to have a look at. When I looked into it further, about 60 to 70% of the coins that I run masternodes for do actually have a portion of their block reward set aside for people who stake in a wallet. So when you think about these coins, I put them in here. The existing supply of each of these coins can only really be shared among 4 different locations. Masternodes, exchange wallets, staking wallets, offline wallets. Of those, the only one of those that's really easy to quantify is the Masternode side of it, because you can go on something like Masternodes Online, and you can see if I go into Dash as an example, it'll tell you right in here, because you can work it out by the number of Masternodes that are online. The percentage that's locked up in Masternodes for Dash is currently 58% of coins. And that's a very typical number. They're sort of around 60, 65, up to sort of 75% will be locked in a Masternode. Excuse me. So the next one down, you might be somewhat able to guess the number of coins locked up, because a lot of the exchange wallets tend to be the biggest wallet for a coin. But the other two below that are a bit more ethereal in terms of the percentage of coins that might be locked up in each. Staking wallets, you can take a guess at by the difficulty for staking, but it's only an approximation. And offline wallets, I'm including in those things like wallets where people have lost the keys for them, so they're gone forever in terms of they're not going to be staked. So when you start to think about these quantities, I've put masternodes and staking in a green font there because they're the ones that are going to actually make you some return in terms of ROI. If we think about how supply might be broken down and shared among those different locations, I've just taken an educated guess here at what a typical coin might look like. So the pie chart on the left here, you see I've taken a guess at 65% of those coins in a masternode, 15% staking. Well, actually, I've made a boo-boo there. One of those should be exchange. That red one should be exchange. No, sorry, I think that should be exchange. But anyway, the point I wanted to make with this slide is that just because it's only a small percentage given over to the block reward for staking doesn't mean you should overlook it. In fact, could be quite the opposite. So, I mean, this particular coin, I'd simply ask the question, if you were going to be staking or considering running a masternode, would you want to be holding your coins in amongst this 65% of supply, chasing 75% of reward, or would you want to be holding your coins in amongst this 15% of supply, chasing 25% of rewards? Simple maths answer should be that you've got a marginal edge by actually staking rather than having them in a node. Also, I've just pulled up numbers out of the air there. It's going to vary for every coin, and it's going to be a complete moving target. So don't assume that one's going to be significantly better than the other in terms of the upfront rewards, but it's worth thinking about. So, as I said, I sort of discovered this a little bit by accident. I had a coin where I accidentally started staking, and that got me thinking, well, have I got anything else sort of kicking around in wallets, not doing a lot? And I had, this was a coin called Send, where I'd nanny nibbled my way into my first node, got a double off on it already, so it was a free node, that was nice. And then I decided I was going to buy back the coins and maybe set up a second node, but I never really got around to, I took the coins off the exchange and put them in a wallet, but I never got around to setting the node up. So I thought, okay, well, I'll just have a go at staking that. So you can see on this particular one, I had my MN1 was my first master node. That was just chugging away, spitting out coins every now and then. And then when I fired up this this second one for just minting, so it's not running as a master node, it's just staking coins, and then this is what I'm minting. You can see clearly here for this particular period of time, given it's the same number of coins working, one for master node, one for staking, staking was well ahead. That's going to be, as I say, a moving target, but it's interesting to know that there are probably some hidden gems that will be more or less overlooked for staking. So I was going to round off with sort of the pros and cons of this. The biggest one, I think, for all of us as traders is when you think about masternode coins, and I think back to my first presentation when I presented it as how to incorporate them into a trading plan. I was very much focused on, I was splitting out by the ROI. It was a bit clunky. Integrating them into a trading plan is quite tricky for some of the ones that have got a higher value that you've got to lock up. Because keep in mind with a masternode, you've got to lock up, say, 5,000 coins, no more, no less, 5,000. So if I go back to, say, something like, this one here. So I'll go back a step. Some of these nodes in the top of the list, if you look at what a master node is worth, and obviously it totally depends on what your bankroll is, but for some of us trying to just buy into one of these, I think we'd have Uncle Brian on our case for breaking the 5% rule. Yeah? Which
yeah, I want to break that rule. That's right. Yeah, and actually, this is the one thing that bugs me about Dash, right? What does the master node go for? It's like $100,000-$200,000 or something, isn't it?
Yeah, well, that's it. Yeah, it's right there, $191,000.
That's so crazy.
Yeah, I'll share that with you now, Brian. That would break the 5% rule for me.
Okay, well, thank you for your honesty. I appreciate that.
But I mean, there are shared master nodes available, right? There are services that run that will do shared master nodes. And I was talking to Bo about
isn't that interesting? So they actually have a situation where you can go into a pool to actually become part of a master node?
Yeah, you can share a master node. Now, the tricky thing with that, especially for us as traders, is that if you want to go that route, and I experimented in the early days with these, is if you're going to buy a share, say that they split it into 50 shares per master node, and you decide that you want to buy 5 shares in that master node, you'll typically end up on a waiting list until there's enough people to fire up a master node, and then they'll fire one up. And that's all well and good. Well, apart from the fact that your coins are sitting there for a while doing nothing. But the flip side of that is when you decide that you want to send them to the exchange to cash out, try and hit a double or whatever, you've got to find someone else to buy those shares to get you out. So it doesn't really work. It's a very imperfect way of doing master nodes to me. So I've kind of gravitated towards, having done this experimentation, really liking the flexibility that staking would allow me to do, because I can buy as many coins as I want, put them in a wallet, have them there. I can move them to the exchange. There's not too much of a penalty if I move them to the exchange. I mean, sure, I'll miss out on a bit of staking, but if I move them to the exchange, my orders don't get hit, and then I decide to move them back, I don't have to go messing around with getting my master node back up or anything. It's really easy. So definitely, if you're going to think about doing a lot of coins, that is one big plus. Next one down, compounding effect. Again, sort of related to the first one. If you're going to plunk down 5,000 coins and have them generate a few coins at a time, yes, you could have them staking alongside that as well, your rewards that you get staked, but staking rewards just sort of roll into each other, which produces you a nice compounding effect if you're leaving them in the wallet. The third big plus point for me is easier to set up and lower costs. Now, this actually is probably more relevant if we go back to good old Masternodes Online and go to the other end of the scale when it comes to, there's a lot of zeros there. Maybe we'll have to go forward a couple of pages, but you can see a few of these in here. If you've got a coin that's got a high supply, chances are a Masternode might not be worth very much. And it might cost you, the supply aside, the fundamental story you might quite like, but the plain fact of the matter is you can't go and set one of these Masternodes up because it's not even going to cover the cost of any VPS. So you have no means of attacking these coins. So it's sort of the other end of the scale from something like a Dash, where you're priced out of that end, you're also priced out of the lower end. But if you're going to do staking, none of that really matters. I can throw as many coins as I want in the wallet, leave them sitting there, and just leave them to accrue. So those are sort of the pluses I could think of about it. The fact you don't have to set up a VPS, I think, hopefully would be a huge plus for a few people in here. Negatives, there's always some cons, aren't there? Security. I think I should probably reference the first Daily Brief special we did here, because Kevin went aligned to security there. So that would be worth a revisit. But I think we commented at the time, when you set up a Masternode, you have a certain level of security by default, because you're typically having what's called a hot wallet and a cold wallet. So your staked coins are essentially sitting in cold storage while you run. With staking, you've got to have a wallet open 24/7. It's not completely open. You're only unlocking it for staking. So as long as you've got it encrypted with a decent passphrase, it's relatively secure, but it's not as secure as cold storage, obviously. And then the final one would in terms of pros and cons that I can think of off the top of my head, would be potentially variance. If you're sort of a little fish in a big pond, in terms of the stake that you're going to put down, it would be well, I've sort of likened it to being a miner and doing solo mining rather than being in a pool. You're going to get quite a bit of variance potentially. So that was pros and cons. I'm conscious that we're now past 6 o'clock, so I don't want to run on too long, but
you're doing great, dude. You just talk until you feel like you have nothing left to say.
Well, I think that was about it. I mean, in wrapping up, I'm hoping it's quite kind of a timely presentation, because as it happens, Bobo was we exchanged a few Telegram messages yesterday, and he was asking about how you might attack some of these smaller coins, and is there somewhere I could point him to? And I had to honestly say not really, but one thing that's sort of been running through my mind, sort of very early stages here, but I'll throw it out there as a suggestion or possibility. Those last two bits, the cons, might be somewhat mitigated if we, as a community, found a way of potentially running some staking pools. So
yeah, in fact, actually, Grim even suggested that. Grim says TRI shared master nodes.
Yeah, sorry.
Master
nodes was something that I initially thought about as well, and I was talking to Bobo about it at the London meetup. But as I say, that.
And have you guys are all planning on meeting the 15th of December, correct?
Correct. Yeah.
So, and if anything, did you find that sort of us initiating that sort of group meetup kind of thing has made it easier for you to interact with other TRIers?
Yeah, 100%. Loved it.
Yeah. So these guys all happen to be in London and around, UK, so they get to meet very comfortably. I know Sjord is totally rocking the Netherlands group. Axel, you're Mr. Germany for us. I want you to be our anchor in Germany. And actually, if anything, Axel, probably can you touch base with Tesla Christian, and just to see how he's doing? But I love the idea of us working communally together to create some sort of TRI staking pool or master node pool or something. And hey, I'm willing to contribute. The only problem with that, Phil, I'll tell you after experience of running this, is you start off these sort of ventures thinking everybody's on the up and up and everybody's going to work together and happy, joy. And then shit happens and it sucks because you're just like, why are you doing this? Why are you acting this way? And people are, their individual motivations are always so messy. Yeah. So if anything, I'd almost suggest that you create sort of like an interest pool, and then get people who are interested in, get the conversation, build relationships, and then maybe the next step is being invited to actually participate in this sort of staking or master nodes pool or something like that. That's the only suggestion that I would add. But I think that's awesome, and that's 1 + 1 = 3. How can we leverage TRI and the relationships? Because we're all generally good PMA people. How can we build relationships further out to sort of leverage this community that we have? So that's definitely something to think about. And if anything, did you create I'm interested in master nodes kind of document like we did with the Puerto Rico document, so you can just sort of get a running list of people that are interested in this?
No, excellent idea though. Yeah.
Okay, so why don't we work on something like that, and maybe in a month's time or whatever, we can update the group on how that list sort of looks, and if people are interested, rock on. I mean, I know Kevin says the Telegram channel's still going. I would prefer, guys, just for the record, if we had to use the Telegram because we were using that old crappy WordPress site and the chat was just a mess. Now that we've got the Rocket Chat system rocking and rolling, I actually would like it if we could to transfer those Telegram groups over to the Rocket Chat and within the TRI community. So let's also work on that as sort of a project too. So we get maybe a master nodes staking room going on the Rocket Chat as well. I think that's a really good idea. So actually a few things for us to chew on here coming out of this presentation today, Phil. Thank you so much.
No worries. Can I just?
I'm sorry. Is there something you wanted to add?
Yeah, I just wanted to be clear. I'm not proposing off my own back to set up a staking pool. It's something that would be beyond my personal capability. I'm great with wallets. I can do the wallets. I can set up a wallet server. But in terms of the front end and the payout engine, and everything involved in pool, I have no fucking clue. So,
yeah, I mean, if anything, let's just consider this an initial conversation.
Yeah.
We're throwing ideas out there, and let's get, if you want to keep using the Telegram group until Sjord gets sort of a room on Rocket Chat going, totally fine. And by all means, what I'm hearing is, can you be sort of the point man? If somebody on the site watches this video and is like, oh, I'm interested, can they PM you? Just sort of like, and you maybe work on that running list of people that are interested? What do you think? Is that a project you could maybe wrap your arms around?
Yeah, I mean, the Telegram group has not been as active lately. I mean, I've been there to answer questions, but it's not been hugely active.
Understandable. I mean, this is a kind of subject for people that are really into this space, right?
Yeah, sure.
Especially last winter, we had a lot of people on the site that were just sort of looky-loos, right?
Yeah.
And if anything, ironically enough, I think you actually want to start out with just a core group, maybe like a half a dozen people or something,
sure.
that are dependable and that are really serious about this shit. Before we get that big flood of 100, 200 people or whatever. So.
Yep.
All right.
Okay.
Anything else you want to add, or do you think you feel like you've said your piece?
No, I think, I'm done.
Okay. Thank you so much, sir. Great presentation. Yeah. I did take a screenshot of just this screen here. Would you mind if I tweeted this out just to tell the public the kind of stuff that we do at TRI and these daily briefs?
Yeah, sure, no problem.
Okay, thank you. And if you have a Twitter handle, post that, either PM me it or whatever, because I definitely want to give you do acknowledgement on this.
Yeah, something I should be more active on. I don't even know. Just much like you saying you're not sure about Facebook, I don't even know if I got a.
Okay, if you want to remain, I'll just say thank you, Phil. Whatever, but. Kevin, was there anything you wanted to add to this conversation today, or do you feeling like Phil basically said everything that needs to be said here? Or is there anything that jumps out at you like, oh, I really would like to mention this?
Not really, but I will just add that I've helped a few people with setting up nodes lately, just friends and stuff, and I'm always down to help. So if somebody wants to hit me up through the site, I'm happy to help them out.
All right, thanks, man. Yeah, whoops, sorry.
I'm pretty familiar with how they work now, so I'm pretty quick about it. But so I'm happy to answer questions for people if they have them.
1 + 1 = 3.
Cool.
Good man.
Right. Okay, guys, why don't we leave it at that for today? I think we did a pretty good offering for the site. Thank you very much, Phil, for awesome presentation. Thank you very much, Grim, for your wise words of advice regarding Simple FX and One Broker. Thank you, everybody, for being awesome participants. I think the only thing left to say, people, Alex, did you have anything you wanted to go out on, or what do you think? Do you think we're done?
Yeah, let's head into the weekend.
All right. You guys have yourselves an awesome weekend. Wondering if Shane's doing a pub crawl this weekend. Have yourselves a great rest of your Friday. Of course, level 2ers, we have class tomorrow morning. So be sharp for that. Level 1ers, you got your class on Sunday. So I want to hear that you guys are rocking the Griminator, the Wookiee. And the only thing left to say, I think, people, is bye for now.